everyone, it is Evan here from the Trade Risk on Tuesday, April 23rd, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to kick things off with our market technicals dashboard. Remember, you can get to this page by going to thetraderisk.com/market-technicals. Keep this updated after the close of every session. So we can see here on Tuesday, we had a strong session today led by the small caps, up almost 1% across the board. Dow lagged just a little bit, S&P up 0.89%, IWM up 1.53%, and the Nasdaq 100 up 1.27%. Setting some records today, which we'll look at in just a moment, but 5-day change numbers in positive territory. We're green across the board. Major indices reclaimed above all of their 10, 50, and 200 period simple moving averages, and life is looking quite good here for the bulls. Now, if we look at some of the sector performance, what's helping fuel this rally, we have semiconductors on top, 6%, almost 6% over the past 5 days, followed by technology and industrials. And on the downside, we have biotech, healthcare, utilities, which are all in negative territory. Biotech, healthcare getting a little bit of a rebound today, but you can see that sell-off was pretty steep over the past week or so, which has it still in that negative territory. Crude oil continues to rip away to the upside here, up 4% over the past 5 days, followed by S&P 500 and China. On the downside, we have natural gas, which continues to make new year-to-date lows. Gold and silver also in negative territory. So let's jump into the charts here. Let's take a look at what's gone on. S&P 500 again was really quiet yesterday on Monday to start off the week, but it came ripping to close at new all-time highs for the S&P 500. We've been talking about this as like a potential magnet to kind of come up here and retest the prior 2018 levels. Now notice we didn't get as high, we didn't make intraday new highs, so we didn't take out the old intraday high of, I think it was like 2941. Give or take. But we are, if the market's closed here right now for the week, if this were Friday, this would be a new weekly closing high. But as it stands on the daily chart, this is a new daily closing high for the S&P 500. So all said and done, we have ripped from the lows from Christmas Eve to where it stands now. We are up 25% in the S&P 500 in under 4 months. So a nice 25% rally in under 4 months. Quite impressive to get up here to these levels. And now we're going to see how the market reacts at these prior all-time highs. Now, we do know that the MACD here still continues to lead here. There's still momentum behind the bulls back here from looking at the MACD in the top pane of my chart. You can see that leads kind of higher with price. And now we're going to look to see on this weekly chart if we can take out this, the intra-market high around 2941, and then importantly close at these high levels. Can the bulls hold on to new all-time closing highs for the S&P 500? That's what we're going to want to pay attention to for the close of this week. Otherwise, all the way down here, 2872, that's the next near-term or intermediate-term reference point that I'd be using on the downside. So long as we're above 2872, we're looking at this 2941 area as resistance or an inflection point to pay attention to the reaction. So S&P 500, that's about all I have to say on the big time frame. Let's go down to a daily chart here. You can see today with the nice magnitude move higher, 0.81% on the session. If we clean up this line just a little bit, maybe switch over to this view here, you can see this is the area we're coming back into. So if you look back here, we made about a week or so, a little week and a half worth of highs of kind of distribution, if you will, up around 29.33 back in September, October of 2018. That's what we're going to want to see how the market grapples with over the coming days. But as it stands, if we can start to clear through this area, it is blue skies above for the S&P 500. There's no overhead supply. We'll be making new all-time highs in the S&P 500 if we can get above this level. So not to say that it's an easy all clear signal to jump in. Of course, there's always risks involved, and the market has covered a tremendous amount of ground, like we just talked about, 25% in 4 months. That's an impressive rally without any meaningful pullback. I think the biggest pullback we've seen is about 3.5% off of the relative highs here throughout the course of 2019. So the sellers just really have not been able to sink their teeth into any meaningful pullback over the past 4 months. Maybe as we come back up here and challenge these highs, maybe some type of failure here and a 3, 4, 5, 6% pullback. Maybe that's something that's in the cards. It's not a prediction, just something that we're going to keep an open mind of. Otherwise, let's pay attention to 29.40, 28.72 on the downside. Those are the levels that I'm paying attention to. If we go to the Russell 2000 here, remember this was over the past week or so, we've been kind of pointing out that the sellers can really start to hang their hat a little bit on the Russell as it has underperformed. It is well off of the prior all-time highs it made in 2018, and it was kind of sluggishly still consolidating in this pattern here. But notice today, after all it takes is a day to certainly start to firm up a chart, 1.5% to the upside here, coming back into some prior highs made last week. And we do have this kind of band of resistance here, just under this 160 area. So it's around 159. We've been failing here. We've been under this level since October of 2018, and we're waiting to see now, given the day one sort of breakout move or expansion move to the upside here, can the bulls get follow through? Can we break out of this resistance in the small caps, in what's traditionally seen as, the risky appetite of the market? And if we can start to clear through resistance here after moving sideways for 2.5 months, that would be a pretty constructive sign for the market, especially if some of the big cap needs to take a little breather here, maybe some more market rotation into the smaller cap stocks to help kind of fuel this market higher. That would be a constructive, positive development looking ahead. So one step at a time. We haven't broken out yet. We're back to resistance where we've repeatedly failed. Let's see if this time is different, but the Russell 2000 certainly today outperforming and looking quite strong. Nasdaq 100 also continuing its march higher. It is cleared to new highs here, and I believe the traditional big composite here has broken out to new all-time highs as well today. So we kind of had that dual breakout. Lots of things to like here. The Q's clearly stretched to the upside here, so you can see how vertical this chart has gotten. And again, no meaningful pullbacks kind of in place here for 2019. It's been pretty shallow, choppy at best, and then just kind of that grind higher. So all in all, bulls leading the charge higher here. Earnings season is underway. Let's continue to pay attention to it. This is the busiest week we've seen so far. I think it might be this or next week might be the kind of busiest, most reporting companies over the 5 days. So be aware of that. We still have a lot of market headwinds or potential catalysts that could be at our back here. So pay attention to those earnings date, check your holdings, and all of those usual earnings disclaimers that we try and always remind people of. So that is the market overall. Let's jump into some of the other major markets here. We'll go to TLT next, which is still down slightly here, minus 0.27%. It's still teetering on, what I would still consider a retest of this breakout area, the top end of this kind of inflection point, right around 123 is kind of the strict level I would use, but generally speaking, we're within 40 cents of it. So for me, this is still in the essence of a retest right here, and basically what we're looking for to see if bulls can hold in here, if this can be a successful retest, we should see a rally higher, a rip back above 123. Otherwise, a failure and continuation below these recent lows would sort of, suggest that this breakout may have been a nice bull trap here for long bond bulls, and we would want to be cautious there. So let's see how this closes out the week. It's at an inflection point. It's pulled back here, and I think it's worth paying attention to at this time. Oil next. USO continues to move higher here, 3.5% to the upside, really putting in a very impressive retracement here. Let's throw on some fibs. If we look at, full swing high to low here, impulse leg to the downside that we saw throughout the last quarter of 2018, we can see now that we have just crossed above the 61.8% retracement. So we've now retraced, going on, certainly the majority of this move has now been retraced very much in a straight line, not as quick as it was on the downside, but almost as quick. And we are coming back into prior supply in here, back from, the second half of 2018. It's been an impressive rally, certainly beyond my expectations of what I would have perceived here for oil, but USO continues to push higher here. It's really tough to fight something like this. The momentum is still to the bull case, and it's moving outside of this nice kind of continuation pattern, this consolidation, which turned into a continuation pattern over the past week or two. So USO bulls still getting it done there, looking pretty, lofty here, extended, tough to chase, but doesn't mean it's an easy short just because it's a tough chase. Natural gas, on the other hand, is basically doing the exact opposite. It is beelining to new lows. It is making new lows on the year. It's been pretty much weak all year. It had, just this brief opening drive here in January, and then it's been pretty much below a lot of its key moving averages here. I mean, there is some positive momentum divergence brewing here in terms of MACD, but the chart itself just reeks of sort of distribution here. And, at some point we will have some type of violent snapback. Maybe it starts tomorrow, but you can see just a lot of consecutive red selling days, mostly on higher volume, breaking to new year-to-date lows. Just not a whole lot to like here, but if you're active, if you're short-term, if you're looking at these moves to play on an intraday basis, natural gas has definitely got a good amount of volatility for you. Next up is GLD. It continues to kind of stumble around here and basically tread to new lows on the year as well. GLD broke below this kind of topping pattern here, below this 121 area. It's still holding below it. We talked about in last week's video, silver was maybe the optimistic sort of look here for metals because it was holding on to $14, but you can see that change today with the gap down. It closed down 1.21%, did close higher on the day from where it opened. So yes, maybe that is mildly encouraging there, but below $14, really tough to get too excited here. It looks like we have consecutive breakdowns in both GLD and silver, and until and if those reclaim that support area, I think you need to be cautious here and respect the downtrend in those metals. So that is it. That is what I have. It covers the major markets and major indices. Thank you so much as always for tuning in and watching. Remember, we are in the midst of earnings season, so let's check those holdings. Once again, we'll put out that reminder. Otherwise, we'll see you in the next video update. Thanks so much.